We've produced 496,000 ounces, which was 10% up on the previous quarter. On an annualized basis, that's higher than the guidance that we provided at the beginning of the year. The costs have come down 10%, the cash costs, and our all-in costs have come down 23%. And we're down to 1,089, so that's a big drop from where we were. So I'm very pleased with that performance, and I think it sets us up to be much more robust and sustainable at current prices. So certainly that's positive news for us. We're looking to cut costs further in our growth and exploration portfolio. We've decided to break that up and distribute those remaining people, and there's probably around about a third of the remaining people that we'll distribute to the various regions. We've cut 16 greenfields exploration projects to about 5. We have also put a lot of our projects up for sale that we don't think make it at these prices, and as a consequence we're reducing the cost there too. So you'll see more cost reductions coming through in this quarter, which I think will certainly help us. And I think by quarter one next year we should be in reasonable shape to withstand some of the unknowns that come through in the industry, but I'm pretty confident we'll stay around these sort of levels. South Deep is building up. This year we'll see around about a 15% increase in our gold production. Next year we're hoping to replicate something close to that, and that'll be a good result for us. All of the key indicators are up. The development underground is up, our de-stress meters are up, our ore tons are up, and that's of course bolstering the gold. So we just got to continue the ramp up of South Deep, and in particular if we can get South Deep to break even during 2014, I think that will be a very positive result for us as well, and that's something we're going to try and achieve. Obviously we have to see what the gold price does, but we've got to focus on improving the production, optimizing the cost base, and we'll see if the Rand gold price does the rest for us. I think the drop in the gold price over the last 6 months is certainly going to hurt the industry, and I think we'll see a significant drop-off in primary production. But it takes time for it to feed through. You know, you have these big juggernaut operations that don't just reconfigure themselves immediately. It'll take a bit of time. And I think you'll find that by the middle of 2014 and 15, you'll see some of the impacts of projects being cancelled, deferred, operations being high-graded, and that'll drop the production base. Recycling is dropping, it's very price sensitive, and demand out of the east continues. So I think the future dynamics and fundamentals for the gold industry are quite good and should support a recovery in the gold price in future, but we've got to be patient. But the industry is certainly cleaning its act up, which is good. And I think by the time we're through this battlefield, the industry will look a lot better and stronger than what it was.